this point, guys, I'm very excited to introduce a colleague in the industry who will be moderating the panel discussion. Let's all please welcome ABS-CBN News Channel's Business News correspondent, Ms. Michelle Ong. Hi, Mimi, finally.
Hi, Danny. I know we usually share the same time slot in the morning. I'm happy that we're sharing the same screen right now. Hi.
Exactly. And I think, on topics very, very close to our heart, the ways that we've chat have been on other personal issues as well. And also, we're both at the same boat, remote working from home, broadcasting from home. You have a newborn, very cute as well. So, very challenging for you, but also you've done everything with stride. So very, very happy to have you here, Mimi. And I'm sure you've got a lot of questions already from those two presentations. And I don't know how you're going to fit that in 10 minutes. So I'm just actually going to hand it over to you because wala na masyadong time. So go ahead and take it away.
Thank you so much, Danny. It's an honor to be part of this Investment Expo 2022 and to be moderating this panel discussion with our esteemed guests. Now, I'd like to call back on screen Miguel Agarao of Philequity and, of course, Pam Victoriano of Unicapital. And joining us in this panel is no other than the President and CEO of the Philippine Stock Exchange, Mr. Ramon Monzon. Hi, sir.
Hi. Good morning, everybody.
All right. Okay,
morning.
Good morning. Okay, so we're going to try to cover as many topics as we can. Let's start with this. I want to start with Miguel Agarao. Historians say, there are two ways this pandemic will end. Medically, when the incidence and death rates plummet, and socially, when people just get tired of being in pandemic mode and decide, you know what, I'm just going to learn to live with this virus. Is the market, Miguel, are investors at that point already?
Yeah,
go ahead.
Yeah, it's getting there already. So if you look, there are countries like Denmark, which has absolute zero restrictions, UK, no more mask mandate. I think investors and the market are both tired of COVID already. And also, I had a really long presentation on this in 2Q, 3Q 2020. We are in the latter half, latter one-third already, based on the Spanish flu timeline.
There you go. Okay, so let me ask Pam now. Pam, you talked about IPOs, but every time we talk about IPOs, there's always in the context of what the market is, how the market is doing at that moment. So let me ask you, Pam, where is the Philippine market in the market cycle? There doesn't seem to be a clear consensus on where the global stock market is at the moment. If you Google bull market, the top searches are the everything bull market is over and we are in bear market. There's another one, the bull market in stocks may still get a new lease on life. Goldman Sachs came out with a report that said returns will likely be low from here, but the bull market should continue so long as economies continue to grow. There's another one that said selling money-making stocks in a bull market is a tough call, but you'll thank yourself when the bears take charge. So where are we? And the battle between the bulls and the bears, where is the Philippine market? Which part of the market cycle are we in?
Okay, well, tough question. Thank you so much for that, Mimi. But I guess what I can comment is that we do see some headwinds affecting the market, right? On a global standpoint, there is expected rate cuts. I think in the Philippines, the news has been maybe a little bit later in the year or not as quick as on the foreign side. But let's face it, the market is still affected by how the foreign funds would invest in the market. I think Miguel earlier talked about that and how the foreign fund investment in the Philippine market has affected our performance, right? So that to a certain extent still does have an impact. We also have the upcoming elections. So I think if you notice from what you've observed in the upcoming pipeline, a lot of them are targeting sometime until March. So people are generally wary leading up to the elections. We're hoping, though, that after the elections, with the new administration, there might be some optimism as we try to understand, what do we expect, right, from this new administration. So I think there's been a lot of hope for that the second half of the year post-elections. So what we notice with our investors right now is that they've been taking a bit more of a cautious stance. They are still making investments, so there's still some appetite for IPOs, but they are more cautious because they're trying to see how this potential headwinds would affect the market and their investments in particular.
Pam, you mentioned the elections. Is the market playing favorites? Does the stock market have a favored candidate based on what we've heard in the interviews and the debates?
Okay. I can't speak on behalf of the whole market, but we do know that some investors, and I think some of them have commented on this, even from global as well as local, on how it's critical. Whoever will win and what the plans are. I think Miguel highlighted that from an economic standpoint, there's also a lot that the new president will have to face. We're coming off of Corona. There's a huge debt load that the Philippines will have to manage. So I think it's critical that whoever the president who will win will have a platform in place on how to address this and how to bring the Philippines back on track. We used to be a darling in Southeast Asia. In the past couple of years, a lot of people have put a lot of bets on Philippine growth, and we think the fundamentals are still there. We're a young, growing economy, which is not something that a lot of the other countries can say. So I think the prospects for us in the mid to long term is good. Now, how to get there, how quickly and how fast we can grow, that may potentially be determined by the next administration.
Miguel, does it matter who wins? Or as long as the elections are credible? Does it matter who?
Well, what's more important than the actual victor of the presidential elections is their choice of economic team. Because, coming from COVID, that becomes a very important concern for people, not just what you do on a headline basis, but also what's the impact on the ground. Mm-hmm. So it's very important to see not just what their economic platform is, but those are motherhood statements. What's the economic team? What's their leaning? Is it going to be populist? Will there be a technocrat? Will there be revenue generating schemes? So because the president can be very different from his economic team, right?
Mm-hmm. But we can still count on the honeymoon period, can we? The 100 days?
Well, in general, there is a honeymoon period. I just don't want to be the type of guy, hey, you know what? I'll invest based on the honeymoon period. I mean, if people dated that way, I don't know how people actually have like great marriages. You know what I mean? Mm-hmm. It just so happens it's there. But there could be. But, after that, the reason there's a honeymoon period is like it's a period of, you remove the uncertainty of, is there going to be a clear and decisive winner? So then you're going to have a honeymoon period after that. People, buy, reallocate. Then after that, okay, what's the program? What's going to happen to the Philippines in the next 3-6 years?
All right. Despite whatever the programs are, like what happened in the last 2 years, it didn't matter whether the market was up or down. The IPOs just kept coming. And last year, as we've been saying, it was a record year for IPOs, and not just for Philippines. Global IPOs also blowing past $600 billion last year, the best year on record. And for context, you've got 980 businesses, global businesses that went public last year. That is more than double the number in 2020. But we know that not all IPOs are created equal. Many, in fact, have failed to deliver historic returns, some even selling off like crazy today. In the Philippines case, and I want to direct this to President Ramon Monzon. Sir, it was a very good run last year. How robust is this year's pipeline? What are some of the names that we should be on the lookout for?
Well, to begin with, like I mentioned in one of my talks, we've never had a listing in the PSE in January, the first month of the year since 2003. This year we've had 2 listings already. So, like I said, I hope this bodes well for the rest of the year. We do have a lot of, I guess, expressed interest in raising capital at the market this year. I think we probably will have more capital raising activities this year, although the amounts raised will probably not be as big as what we were able to raise last year.
Sir, could you give us a quick rundown of the names that we could see this year?
Okay, well, as you know, we've had already
House Talk
and Figaro. The next one is we have Citicorp, the solar power REIT. We've got CTS Global. It's an SME listing on the, it's a stock brokerage. We've got the Bank of Commerce, which presented to PSE the other day. We have this Raslag, another solar power firm. And then we have a couple of stock rights offering and follow-on offerings. So we have a very robust, I guess, pipeline for both IPOs, FOOs, and even for SROs.
Sir, it seems like when you talk about the IPOs, the big names have already gone public. That it seems the next few names are going to be from the SMEs. Is that accurately the case?
No, well, we expect more SMEs this year. Like I'm sure you're familiar. about this. We have our hand-holding program, no, for companies that want to list, for SMEs. And so we have more than 30 companies registered in this hand-holding program. So we expect to be able to churn a few of them into actual listing. But, you know, I mean, we still have, there's still interest in them, you know, in the main board listing. In fact, on the REITs, we're hoping, well, you've read about the double dragon Jollibee industrial REIT. We've heard about the Vista Land, you know, commercial real estate REIT that they've talked about. And of course, we're still waiting for the, you know, supposedly the biggest REIT listing, which is the SM Prime. No, I mean, we hope that's forthcoming this year.
Outside of REITs, sir, whenever we talk to analysts or investors about big companies who have yet to go public, the names that usually come up are Unilab, Mercury Drugstore. Why do you think, sir, they haven't taken the leap yet?
Well, every year we meet with the owners. I mean, perhaps there is no need for them to, you know, to raise capital from the, you know, from the market. So for them, you know, I mean, the added burden or responsibility of being a publicly listed company is not worth it for them because they don't need to raise capital anyway. But you know, there are other big firms who, what we're hoping to see are big firms or there are foreign investors. You know, for example, I mean, as you know, Converge was able to do an IPO because you know we gave them an exemptive relief from the requirement that you know, stock or shareholders who convert their shares, you know, at a price below an IPO price within 6 months of the IPO, they're locked up. Okay, they cannot sell. But you know, we were able to get an exemptive relief for Converge, for Monzon, also for Del Monte, which of course eventually backed up. So this, I thought this was a very important development for the foreign investors because, you know, they say, well, you know, the DNA of a private equity firm is to exit. So now, you know, exiting from their investments is much easier. So for example, we've seen that another unit of Warburg Pincus invested in GCash. GCash might not, you know, need capital, but I think there will be pressure from, you know, their foreign stockholder to list, so that an exit mechanism is provided them.
Good to know, sir. At least we can expect more foreign investors coming in. Speaking of IPOs, we have a question for Pam from our participants. This question is from Cesar Castillo. This is for Pam. Does the underwriter have an impact on the IPO? And related to that, another question from Jan. What is the role of the underwriter in an IPO?
Okay, so let's start first with the role of the underwriter. So aside from doing due diligence of the company and helping the company in putting together the prospectus, the main role of the underwriter is really to interface between the company and the investors. We do book building, which is essentially a price discovery mechanism. Earlier, we talked about valuation, right? So perhaps you have a sense, okay, in the next couple of years, this might be the potential value of the company. But at what price are investors actually willing to buy? Because as we noted earlier, the markets are continuously changing and moving. And sometimes a quick news globally is something that can affect demand or dry up demand within the market. So part of the role of the underwriter is to be able to bring these two parts closer together to, of course, deliver the best deal possible for the company, but at the same time balance that out with what they hear is the investor appetite. So that's why in an IPO you will hear the announcement of the final offer price, and that's essentially what we hope to take in. What is the market sentiment? At what price are we willing to buy? And in relation to that, does the underwriter have an impact on an IPO? Generally, the bigger the IPO, the more underwriters you have on the book, just because you want to achieve more distribution, more people as well to hear and understand about the business. It takes a lot of risk as well, of course, because we underwrite these IPOs. That means to say a chunk of our balance sheet could potentially be taken up by the shares that we underwrite out of the firm. So normally the bigger IPOs have more underwriters, and sometimes and that's something you can see in the prospectus. There are offerings which are offered not just in the Philippines, but also offered to offshore investors. So this is determined as well by the type of underwriters that they hire. So typically for those, you will get a foreign underwriter to help the company distribute the stock to offshore investors. So this underwriter have an impact. I think it's part of the structure of the IPO as well. Like what is it that we want to achieve and what's the size of the IPO that the company is contemplating. Hope that answers the question.
So underwriters work for the company going public.
Yes, they do, because the fees of to be frank, the fees of an underwriter are paid out of the proceeds from the IPO. So in that sense, we're aligned with the company that we want to raise as much as possible because our fees are dependent on how much we raise, right? But on the flip side, we take a risk. The moment that we price, we need to guarantee that those shares will be either sold or taken up by the underwriters. So we want to balance that out. So at what price are investors willing to pay?
Okay, Pam, we have a comment here from Romel Sumage. Nice framework for assessing IPOs. So that's a comment for you. And another question from Glory Grace Rosa. How many years is the ideal holding period for IPOs?
Okay, so I'm going to go back to one of my earlier slides. It depends on your risk appetite and your investment profile, right? Again, if you're, let's say, I'm investing in this IPO, like let's say way back in Jollibee when it started. I want to hold this for the next 10 to 15 years so that maybe I can give it to my kids, or 10, 15 years down the road, I don't want to sell it. So in that case, you may want to invest in blue chip stocks. On the flip side, again, if you're the type of investor who's looking at this as, and we don't advise this, especially about given the work that you put in trying to understand the IPO, if you're just looking to do a quick flip, right, then in that case, we're expecting that your threshold is going to be driven more by technicals. So X amount of profit, X amount of drop in price, then I may want to cut on the IPO already.
Okay, thank you for that, Pam. We have questions for Miguel now. This one is coming from Maria Paz Felin Cruz Tayag. Miguel, what is your outlook for REITs given rising interest rates?
Well, the REITs have done spectacularly. Nearly all of them, they're outperforming their parent companies. And, you know, even for me, actually, REITs are such a great alternative to bonds or time deposits. So they should become less attractive as interest rates go up. But as long as the REIT has expansion plans, the price movement should be fairly robust because your minimum return per year is going to be at least your dividend, right? You're going to get something back. But can the price appreciation at this rate continue in rising interest rates? Not necessarily at this clip, but they can still go up.
And still on rising rates, what would be the impact of interest rate hikes on stocks?
Well, in general, as you saw in my presentation, it's gotta be a really choppy next few quarters. So yeah, and you know, if you're invested in the US, the negative free cash flow names, like those that need outside capital to make money, those are gonna have a really tough time. I mean, there are names there which are down like 50, 60, 70%. I don't know if you guys watch what happened, Billions. I mean, you saw what happened to Peloton. And there's another show before that where someone died of a heart attack at the Peloton. Dalawa na eh.
Dalawa na. That's Billions and just like that.
Yeah. So durug na durug yung Peloton. It's unbelievable. So so it depends. So some stocks will fare worse than others.
But for context, that could also be the market telling us where things were headed. The stay-at-home stocks have been going down, while the outside world stocks like Planet Fitness, which is you go to the gym outside, it's going up. So you can see where Wall Street thinks we're going with COVID. A comment here for Miguel from Leo Rex Infante. Appreciate the well-researched content and very informative. Okay, so very quickly from Miguel and Pam, I was wondering, you know, for those who are looking at the index, for those, you know, we remember how we peaked the 9,000 level back in 2018. That feels like a lifetime ago. And it feels like we may have seen the bottom in March 2020, 4,700. I remember that day when COVID broke out. What's your index call for this year and next year? Just very quickly, just a number. Let's start ladies first, Pam, and then we go to Miguel.
Okay, sorry. So for this one, I'll have to defer to our research team.
Okay.
On with regards, maybe Miguel, if you can take the question first.
Okay, Miguel.
Okay, well, our target's 8,010.
8,000.
And I just want to try that's not a demanding target. We're only looking at 10% upside. The earnings growth is like 20%. So, there's room for upgrade for this target. We just weighted it given a lot of uncertainties. And that 8,000, you could go higher than that towards the end of the year as you look forward to 2023. You're gonna hit 9,000 eventually. It's just a matter of time.
Okay, I was going to say the most optimistic view I got from a technical analyst was 9,000 this year. Anyway, so there's a lot of excitement in the PSE. So let's see what the PSE has in store for investors. I know that the PSE is launching so many new initiatives to give Filipinos more options. So, Sir Monzon, can you tell us more about the new initiatives of PSE? Maybe I know that you're launching new sub-indices, new products on the menu.
Well, for one, we'll be launching two new indices in it's still next month, February.
Okay.
We'll be launching the high dividend yield index and the mid cap index.
Okay.
Hopefully, these new indices will, entice the creation of new index linked funds. Okay. And again, it will offer liquidity to companies outside of the of the PSEI companies. We're of course we're still waiting for the short selling approval from our regulator. We will be launching our data analytics platform also in March for retail investors. We are going to be launching what we call PSEC 2.0, meaning
Wow. Okay.
we will now involve all the FOOs and SROs in the the PSEC to make it convenient for small investors, and we will now make it we will integrate the payment in the platform itself so that the retail investors don't have to go to the bank to make a payment. We're developing an eKYC platform so that people who want to open an account with brokers don't need to go to the office of the brokers anymore and be interviewed by a broker. So that's our project that we're hope to launch sometime this year. And we have some rule changes that will, one of the offshoots of a recent IPO that really did very poorly is we will be in fact soliciting public comments for a rule change next week on making it mandatory for companies that do an IPO or an FOO to have a required stabilization fund of 15%. Okay, only when there is a secondary component in the offering. If there is none, then there won't be any. We have a lot of rule changes also that we're implementing to as part for mandate of investor protection. As simple as we are going to plug a loophole where companies reduce the par value right before they do an IPO, so they can offer the shares at a much lower price. I mean, retail investors have the psychology that if it's a cheap it's a cheap price, it's a good value. So a few companies have done this, and we want to plug the loophole. So again, that's up for public comments that we'll be submitting next week.
So it's a tough balancing act for the PSE, sir. You have to grow the market and protect your investors and help these businesses grow.
Like I said, Mimi, I mean, we take our our investor protection responsibility very seriously. But like IPOs or any offerings, I mean, we cannot tell the investor this is a good offering or this is a bad offering. We're what we call a disclosure regime organization. What we have to do is make sure that the companies, adequately and properly disclose everything that has to do with their companies. Like I said, for me, the best antidote to investment scams is really education and information.
And speaking of information, we don't have much time. For the next 2 to 3 minutes, I wanted to get the take of Miguel and Pam for some of the big news happening at the PSE for listed companies. We're not going to name them. So this is sort of a blind item style, but we're not going to name these companies. I'm going to identify the situation they're in. And maybe you give us your perspective on whether this is good for investors. It might be interesting to get into this. So I want to start with this one. There's a company whose SRO was canceled due to weak demand and poor market conditions. The SRO was first extended and then it was canceled, but they're now saying they're going to relaunch the fundraising offer later this year. When you look at offers and you're an investor and this happens to this company, how do you view the offer? Are you going to stay away from it? Is this a red flag, Pam?
Okay, so, well, the fact that they had postponed the offer would probably mean typically it's either demand was too weak or the price at which demand is at is something that the issuer is not happy about. I think we've seen that in a couple of offers. Sometimes we would have good volume, but the market wants a price that the issuer may not be comfortable with, so they might ask or choose to cut the size of the issue. So that typically happens. I think a consideration, though, is because of earlier I talked about how the business plans, right, are fueled by the capital that we have. Whenever you have growth plans, it's fueled by the capital that you have. So the question for me is what other sources or what alternatives there would be for this company and how that affects their future performance that they're expecting.
But Bibi, can I say something about that? Okay. I mean, again, without mentioning the name of the company, like this company, I mean, did indicate yesterday that, you know, they would be canceling their SRO. And if you will notice, we have not uploaded that cancellation in the PSE Edge. Why? Because for the simple reason, we're not sure that they can unilaterally cancel an SRO. Okay, why? There's an underwriter. One of the responsibilities of an underwriter is that firm commitment. Okay, so even if it does not sell, the underwriter, I think, has a firm, commitment to take up those shares. And number two, there's a practical problem from our point of view at the PSE. When they announce that SRO, of course, there is an X date. Okay, at that X date, the PSE adjusted the reference price to take into effect that the SRO shares. What are we gonna do now? Are we gonna readjust the price? How about the investors who sold at the lower price because they thought they would get additional shares from the SRO? I mean, so these are the things we're trying to, iron out actually today.
Okay, we're getting.
We need to be able to determine because, market's gonna open on Monday and we need to know, I mean, do we upload this? Is this something that can be done, or not?
We will be watching, Sir Monzon. One more, this one, maybe I can ask Miguel. A former tech darling that, in the words of some investors, fell from grace, gets fresh capital from one of its founders. What do you make of this?
Okay,
without naming names.
Yeah, don't worry. Fresh capital.
Okay.
Yeah, fresh capital is always a good thing, but you have to ask yourselves, why did it fall that much? Is the business model on which people are investing still intact, or is it impaired? What are you really buying? Is there a long-term going concern outlook for this or not? That's what people have to ask themselves.
Okay, and final blind item. Well, two manufacturers are rumored to be set to enter the PSE index when the next rebalancing comes around the corner. Is it time to buy?
Okay, I think these entrants are well telegraphed already, and I think the age of buying index inclusion plays and selling them on announcement date is done. I think that's already something that's been played out last year. I don't think that will work to a certain limited effect only this year.
Okay, and final question for all of our panelists, Sir Monzon, Miguel, and Pam, answerable by one word. Let's wrap this with one-word answers. Why now? Why invest now? So let's start with Pam, Miguel, and let's end with the president, of course. Pam, why now? One word.
Opportunities.
Opportunities, Miguel?
Uptrend.
Uptrend. Sir Monzon?
I will use a number. I will use Miguel's number, 8,010.
There you go. On that note, thank you
I
very
should
much,
have done that.
and gentlemen, for joining us in this panel. And I would like to end this panel session with wise words from the Oracle of Omaha, the only one, by the way, in the world's 10 richest list to have gained wealth this year so far. His net worth climbed $2.4 billion this month alone, leapfrogging Mark Zuckerberg. Warren Buffett once said, "Be fearful when others are greedy. Be greedy when others are fearful." On that note, we turn you back over to Danny. Danny?
Thank you, Mimi. That was so much fun. Okay, uptrend opportunities 8010. What a way to close off this session. Thank you so much. And I hope to see you in person very soon, Mimi. I mean, we can't just keep talking online. We do need to get out there and, of course, enjoy the opportunities together. So thank you so much for moderating that wonderful session.